What is happening, guys and gals? Joe Badger here, your money mentor, where we have deep pockets and short arms, and where my goal is to help you with my nearly 40 years of experience with investing and business. I want to talk about 5 long-term investments for life, solid investments that will stand the test of time. Now, of course, no investment is guaranteed or is perfect, but in the grand scheme of things, there are those that are much better than others. Whether they be specific or a little more general, I put together 5 solid long-term investments for life that I think you should definitely consider. But before we get into the details, make sure to subscribe because we have a lot more coming and you do not want to miss out. So let's get into these 5 solid long-term investments for life. As we get into the details of these 5 long-term solid investments, keep in mind that they are just that, long-term. I would say long-term is 10 years or more. You have to be a little patient, but the good news, you get to watch your investments grow over time and slowly develop into a good retirement fund or nest egg. So the first investment that I suggest, and that has served me well, very well, over the last 5 years, is FNCMX. That's the ticker symbol, FNCMX. FNCMX is a mutual fund, or more precisely, an index fund, which follows the NASDAQ Heavily Weighted Tech Index. This one happens to be by Fidelity, and that's why it starts with an F. And there are other index funds out there that follow the NASDAQ, but I found this one to be particularly good over the years. A very low expense rate with very high returns, especially over the long term. When you look at the long-term chart, this really performs well, even better than the S&P 500. Now, I've also noticed that when the market goes down, this fund seems to go down a little deeper than everything else. But when the market goes up, this thing is outperforming everything else as well. It has a really good long-term track record, and that's what you want to be looking at. Keep in mind, every investment that you have, you're not putting everything or all in on just one investment. You're taking the money that you have to invest and you're taking a percentage of that. A common approach is 5%. 5% of the money that you have to invest in any one investment. Another thing that you can do is you can grow the investment over time by slowly building into it, whether it's monthly or yearly. But the good thing is with FNCMX, you're going to see it grow over time and slowly help you to build that retirement fund and that nest egg. I think this is a really good investment, whether you have just a little bit of it or a lot of it. I think it's definitely worth looking into and considering for the long term. The next investment that I want to talk about that is definitely good for the long term is FSKAX. FSKAX. That is the ticker symbol for a mutual fund, another index fund, but this one follows the entire market. And as we all know, the stock market over a long period of time is a solid investment. There are always ups and downs, losses and gains, but if you stay with it over a long period of time, and like I said, we're talking 10 years or more, the stock market is a great investment. And this fund, once again, it's by Fidelity, and that's the F at the beginning, and there are many other companies who have total market index funds. But this one I researched, and it has a very good return and a bonus very good dividends. So every quarter or every year, whatever their schedule is for this fund, you're going to be reaping dividends on top of your yearly gains. Also, when it comes to expenses, this is one of the smallest expenses of mutual funds and index funds that are out there. So once again, FISCAX, I think, is an awesome investment for the long term. And there are several ways you can use this investment. Yes, you can trade it over the short term, whether it's a couple of months or a couple of years. But I think in terms of this fund that covers the entire market, I think you really want to think more long term, which means putting money in monthly, even if it's a small amount of money, putting money in yearly, and watching that accumulate over time, especially with compound interest. Now, by total market, that means this includes the NASDAQ market, all the tech stocks, but it also includes all the Dow Jones industrial stocks. It includes the S&P 500 stocks, which are all great stocks. It includes other indexes, like, for example, the Russell 2000. But in other words, it's the entire market. It's everything, the best stocks, the not so good stocks. But when you watch the market and you look at the chart over a long term, you're going to see that this fund is really strong. Plus, you have the bonus of those dividends and low fees, low expenses on top of it. Another great investment that I think you should really consider for the long term is quite simply real estate. Now, with real estate, it's very interesting because there are many ways that you can actually invest in it. So we're going to explore several of those ways. My grandparents, long ago, began investing in real estate very young, and they did it in a very interesting way. My grandfather was a general contractor, so they quite simply built homes, built office buildings, and then either sold those or rented them out. That way they had a really low cost going in to the investment, which is essential. And of course, over the decades, over a long period of time, those real estate investments accumulated, they were debt-free, and they were just taking in the income as they appreciated as well. Eventually, they would sell off some of the properties and hold others, but that was their one style of investing in real estate, and there are many other ways to do it. A lot of us have heard of the buy a home, fix it up, sell it, or buy a home, fix it up, and rent it out. Those are two other ways that you can invest in real estate as well. The key there is you don't want to be underwater with your investment. You want to be renting your property out for a lot more than your monthly expenses. And those monthly expenses can entail a lot of different things, whether it's the mortgage, whether it's repairs, whether it's real estate, taxes, whether it is utilities that you are going to be paying as opposed to the renter paying. So make sure that you're not underwater, that you're actually making a profit. Another way that you can benefit by investing in real estate are REITs, R-E-I-T. These are basically mutual funds or financial investment products that invest in different types of real estate. So in this case, you can buy a stock portfolio of real estate investments without getting your hands dirty. One thing I want to say about buying the properties, the office buildings and the homes, etc. There are a couple of different theories out there on how to go about doing this. Some people believe that you should save up all the money and then buy the property with cash so that you're totally debt-free. Other people believe you should just mortgage the property and only pay the small down payment. And there are a lot of advantages to that, because let's say the property is going to cost you $100,000. Usually you're paying 20% down, so all you have to put up is 20%. And then you find that renter, and that rent, remember, is going to cover your costs of the mortgage and expenses. Overall, real estate is definitely a good investment, and you'll see that many people agree. It's just a matter of different philosophies, different styles of going about that and making it happen. But keep in mind, that's a really good long-term investment for life, and I would definitely consider it. Another great investment that I definitely think you should consider over a long period of time is Berkshire Hathaway. This is a stock and a company that was founded initially by Warren Buffett. Now, Warren Buffett is not a gambler. He is not a day trader. He is an investor, long-term, and arguably the best investor of all time. So, why should you invest in his stock, in his company? Because it has a very long track record of growth, steady growth and profit. Now, Warren Buffett is very interesting because he started out first buying stocks of companies that he just thought were absolutely solid companies and businesses. And he would build positions in them, so much so that he would end up just owning the company outright. Now, if you actually looked up the ticker symbol, your head might explode, because Class A shares of Berkshire Hathaway are like $400,000. It's ridiculous. But a few years ago, they had issued Class B so that people like you and me can actually buy shares in Berkshire Hathaway. I remember when they issued the stock, if I'm correct, it was at about $72. Now, I have a little bit of history with Berkshire Hathaway and making some good money over time. Warren Buffett bought some shares in Burlington North Railroad. So, of course, my thoughts were, well, if Warren Buffett is buying shares in Burlington North, I guess Joe Badger is going to buy some shares in Burlington North. So sure enough, I did. I put about $20,000 into this railroad company, and I was making a really good profit. Sure enough, Warren Buffett just bought the whole company. So he owned Burlington North Railroad, and I had a stock that was just on fire. But they gave us an option of what to do. They said, you can cash out your stock and take the profit, or you can convert all of your Burlington shares into Berkshire Hathaway shares, the B shares, the inexpensive ones, at about $72 a share price. And I thought about it, but I said, you know what? I made a good profit. I'm going to cash this in. It was a great trade for a couple of years. And so that's what I did. I took the money and I watched the Berkshire Hathaway B shares for a while to see what they would do. Eventually, when it got to about price of about $80, that's when I put about $20,000 into Berkshire Hathaway. And then sure enough, of course, with my luck at the time, I was like, the stock started to go down. And then it was stagnant for about a year and a half or so before it then went up again. And then I remember selling it somewhere in the 90s, let's say, the stock price in the 90s, made a nice little profit, and definitely was a steady stock for a long-term investment, but I decided just to trade it at that time. Today, I think the stock is somewhere closer to 300 or just under 300, somewhere around there. But if you look at the long-term charts of Berkshire Hathaway, sure enough, it's slow, long-term, steady growth. And you're investing with a guy who is definitely the best investor that probably ever lived. So it's worth looking into. Berkshire Hathaway If you have enough money to buy shares at $400,000 each, and when they go up 1%, they're going up $4,000 in one day, you can do that. Or if you're more like me, who would like to invest in Berkshire Hathaway, and you have less money, and you can buy the share stocks, the B shares, at less than $300, somewhere between $250 and $300, that's a really good investment. And it's going to grow steady over time, and definitely I would consider it for the long term. All right, so let's sum up. First of all, keep in mind that any investment, whether it's short-term or long-term, can be risky. So as long as you know that going in, you're good. But in the grand scheme of things, there are certain investments that are a lot less risky than others and will perform a lot better over time, especially like the ones I mentioned here, Berkshire Hathaway, long-term history of growth, the overall market, long-term lifetime history of growth, and real estate. Usually always goes up. It's solid, it's good. Many people are in it for a reason. If you have any comments or any questions, leave a comment below. I'll do my best to answer your question, especially if I kind of breezed over something here. I try to keep this as simple as possible while giving you enough details on these long-term investments. A couple of things also to remember is that the best time to invest really is now. If you keep putting it off, then you don't get the benefit of one of the key elements of investing, which is time itself and growth and accumulation and compound interest. Thanks, guys. Keep investing, and we'll see you next time.